News was at 5:30 a.m. my time. Oh, so you're in California, or you're in West Coast. You're in West Coast. You're in that West Coast time zone. And that's hard. Trading West Coast, I tried to, yeah, Cali. I tried to, when I was in Cali visiting, I tried to trade. Oh my gosh, that was hard. Waking up at like, 6 o'clock in the morning was hard. Appreciate the follow. Yeah, waking up at 6 a.m. is not easy. Oh, you work nights? It is a nice schedule for trading if you work night shifts. You could trade in the morning for a couple hours and then go to sleep. All right. We're starting to push for pre-market highs. Pre-market highs are pretty interesting too, right? We'll see what happens at pre-market highs. So we're about to take out pre-market highs. There they are. There's the sweep. Let's see how this candle closes. It's leaving behind a gap. See what happens at that gap. How price react. Interesting how price is going to react to this. It hasn't closed yet, so gotta be careful. I'm not gonna mark it out until it closes. Let's see. Got about 20 seconds left for this candle to close. If it leaves behind this gap, it'd be pretty interesting to see what happens. Maybe for a scalp short. And so it did leave behind a gap, but it's kind of right into that 200, which is see. All right, let's see what happens here. Potentially for a short for the lows. We got 30 seconds left. We got a pretty decent size rejection off the pre-market highs. Maybe go in light position because we got view op there. So we'll see what happens here. How price is going to react. We could potentially 15 seconds left. Got a pretty strong rejection off pre-market highs. 15 seconds before this candle closes. 5 seconds. Let's see, come on. Oh, come on, let me push up a little bit. All right. Potentially a scalp short for these lows over here. If price can kind of push down and take out these lows, it's already taken out pre-market highs. So my idea is I want it to come down and start taking out potentially this level here, right? So let's see, we got kind of like this target down here to take out this level to potentially, I'm gonna have it right at that level. My profit target kind of right at that level for it to take out that level and then potentially start moving back up. We'll see. It's gonna have a little bit of trouble here. It's got to get through that 200 day. Let's see if how it reacts to that 200. Now we've already taken pre-market highs, so right, I want price to start going lower to start taking out some kind of like buy side liquidity before it starts going back up. Right, my idea is it shouldn't have to really go back up anymore because it's already taken out that pre-market highs. But who knows? Price can. We did leave behind a pretty big size gap too. Right, a bearish gap. So we'll see. We don't really have much news to worry about, so that's the other thing. We got to get through this 200. We're at that 200. It's got to start breaking down that 200, and then we're a pretty straight shot for my TP. We got the pivot down there, view op down there, so I think it's looking pretty good for a TP. We'll see what happens here. What are you trading? NQ futures. NQ futures. Let's go, NQ. Come on. We got this good relationship here. Don't screw it up. Don't screw it up. Let's go. Dump it. Dump it down. Down, down, baby. Let's go down. Let's go. We need a dump. Let's take it out. Let's get it. Let's get it. Let's get it. All right, we're below that 200. We're under the 200. We're pushing close to that pivot. Hopefully, it's going to take me out before it hits the pivot. Let's go. Let's go. Let's go. Come on. Hurry up. You're giving me too much anxiety. All right. It's going to take it out. It's going to take it out. It does this. It likes to mess with me. It likes to mess with my stop. I mean, my TP. It likes to mess with my TP. It's going to do this crap. You got it. You got it. Come on. Come on. Come on. Come on. Let's go. You're so freaking close. You're so freaking close. And TP. How do you make a profit when it goes down? I short. So the way it works, let me make sure I cancel all my orders. Hold on. I don't want to be stuck in a trade. My copy trader is flat. All right, we're all good. All right. There's TP. All right. I did the exact same trade, but I only made 60. Well, I'm on evaluation accounts. If I was on my funded, I'd probably be sized a little bit lighter. And I still wasn't even really heavy size. But I'm up like 300 on that trade. 300 bucks times 4 accounts. So looking good. And as I make more profit, I'm going to size a little bit heavier. As I make more, get closer to my, obviously depending on the trade too. But pre-market highs, that was a good level for a, oh, stopped out of your trade. Hopefully in profit you were stopped out. Hopefully in profit. Well, somebody asked something. So pretty much when you short, right, you have a buy market and a sell market. So when you put sell, when you sell, you essentially go short. And then to cover your short, you have to buy back the contracts. So that's kind of how it works. So when I sell, right, I'm automatically short and I make money. As the stock moves down, I'm making money. And then to cover my short, I have to buy back those contracts. So I'm selling at a high price and buying it back at a lower price, and I'm making money that way. And then obviously to go long, you buy and then sell at the top for a profit. But to go short, you sell and then buy at the bottom to cover. Minus 60. That's not bad. That's a pretty small loss. Well, depending on how usually you trade, but it's not a bad loss. Yeah, holding a trade during like into market open is, I mean, it could be very rewarding, or I mean, it could be, as long as you manage your risk. It's, and we did one contract. Yeah, on my funded, I usually trade one contract. But yeah, it's obviously it's better to be sized down. Kind of the more like the you want more wiggle room for drawdown. You don't want to be so heavily sized that like you end up, you know, blowing your account for one trade or two trades. I actually saw a video the other day. I got back in for a buy. Yeah, it's not a bad. See, now that we've swept this level, that's why I had my target at that level, right? Now that we swept this level, I mean, I would wait, personally for me, I would wait for this to get kind of inverse right there. This gap right here, for this gap to get inversed. Once this gap gets inversed, we do have this gap right here you got to be careful about. But, all right, now we're pretty good to go at least into this gap, in my opinion. I think it'll at least push into this gap. I don't know if it'll reject off that gap, but I think it'll at least fill it. Now it filled the gap. Let's see if it continues pushing. But yeah, not a bad, honestly, not a bad long. I just took that trade, so I don't know. I really don't want to be in another trade right now, even though this trade isn't bad. This is the level I had marked out too. I had this level marked out for a long. Not a bad trade. I would potentially start taking profits soon, just because of this gap right here. You want to be careful. You want to be careful. It's already swept pre-market, so there's a potential it may fill this gap and start dumping at the 50%. It just filled that 50% mark. That's kind of where I would want my TP in essence. So I'd be trying to. That's a what? That's a 20 point so far, and then 60. For a 1-to-1, you would have to do 20. Kind of a TP up here. Actually, I would do just to target that 1-to-1. But looks to be working out. You just got to be careful. I'm a hold. Yeah, as long as as long as you manage your risk and you're willing to hold for to see if it maybe breaks the top. It can break it. Considering pre-market price action, how it's been making, it's been on a continuous uptrend. I wouldn't be surprised if it starts breaking the high. But there's going to be some form of kind of like selling pressure in this gap. It's got to get through this gap in order to continue going up. Oh, what I was going to say earlier, right? I saw a video the other day of somebody complaining about trading. He's like, he made a video and he's sitting there. He made a video and he's sitting there like, I don't know what I'm doing wrong. He's like, trading. I've been trading for 2 years. I just been losing. I feel like giving up and this. And he's like pretty much complaining about trading. And then he goes on to say, the other day I bought 2 funded accounts or whatever. The other day I blew them all in one day. Like, and I'm sitting there thinking, I'm like, is he seriously like, is this for real? Like, he's blowing his accounts in one day and he doesn't know what he's doing wrong. Like, if you're blowing your accounts in one day, there's 2 potential scenarios. Either you're over trading like crazy or you're sized in way too heavy. There's no reason that should even be a possibility to blow your accounts in one day. Like for me, that's not even a possibility. I don't see how I would blow my accounts in one day unless I canceled my stop loss or something, but that's crazy. Like, I don't know. It makes no sense to me why. But yeah, that goes into like, you want to be able to, and later on in your strategy, you're able to actually adjust it, right? For example, if you're trading only one contract right now, there, my TP would have just got hit. I would have had my TP right there for a 1-to-1 for this trade right here. Crap, I should have took it. Oh man, crap, I lost my train of thought. But yeah, in essence, you want to be able to hold your accounts as long as possible. Like, oh, this is what I was going to. So you can start out by having, like, allow yourself a lot of wiggle room, right? To be able to take multiple losses. And then as you go on with your strategy, as you kind of progress and you start to collect data, right? After a time, you kind of know, all right, I never really take more than X amount of losses in a row. I never really took more than 3 losses in a row. My max, I've been trading for, say, 6 months. The max losses I took in a row are 3, 4, whatever your max losses for 6 months were in a row. And keep track of that, because later on down the road, when you know your data, or if you've done your back testing, whatever it is, but when you know your data, you're able to size accordingly, right? So if I know I never really take more than 3 losses in a row, I can allow myself 3 losses and then maybe a couple more losses. So 5 losses. So I can allow myself 5 losses in a row, and then I can size accordingly to whatever that is. Whether it's a $200 risk, $300 risk per trade. And then as you build up your account and you give yourself more buffer, you can increase your size too. And then if you go on a losing streak, you can decrease your size, make it back, start increasing your size. So you're kind of, you got that good balance. Yeah, it's futures trading. Crap, I should have took this trade. I just took profits on one trade, and I was like, wasn't even really like, I don't know, taking profit on one trade and immediately getting back in for another trade. I needed some, like, But looking back now, freaking A, I should have took it. So pretty much, right, it swept this major level, started pushing up. We closed above this gap pretty, like, perfectly right there. We closed above it, and then you pretty much I would target inside this gap. Holy, a 1-to-1 risk to reward ratio. So 1-to-1 would have been right there inside that gap. What is that? Bro, we're starting to push. The trade's looking good. Best way to pass an eval? I would say take it easy. I would say, I mean, obviously it depends on your skill level. It depends on your skill level. If you're somebody who's like, if you're still kind of in the beginning stages of trading, I would take it slow. I would take it slow, try to have a strategy, figure out what strategy. If you already have a strategy, still take it slow. I personally take my eval slow. I don't try to, like some people try to pass them in one day, in one trade, right? So, I mean, I try to take it slow. If you're someone with more experience, right? Some people that have more experience, they're able to actually size heavy to pass it in maybe a couple trades, because they kind of know their strategy, they know their system, they know, so they're able to take good quality setups and just go super heavy to pass them in one day. But my opinion, I think you should take it slow and just kind of, work your way up. Allow yourself, 5 losing trades in a row potentially, and just depending on your strategy, obviously. But I mean, there's no reason to pass it in one day, because if you're just willy-nilly trying to, full port pass in one day, it's just, it works if you have a strategy and you're profitable and you just want to pass. But if you're still learning phases, it doesn't really help you. Your goal is to learn, not to just, pass the eval in one day. Are we waiting to retest the support? I would have got into the trade already. I mean, at this point, I wouldn't go long yet. I would have went long right here. I marked this out. I didn't take this trade just because I just got out of the last trade, so I didn't take the trade. But yeah, this would have been the trade right here for me. I would have got in as soon as it swept that major level. Buying stepped in aggressively, right? And then we got closed above the gap for a 1-to-1 inside this next gap right here. About to start expanding my stop loss. Oh, do not. If you're in a short, get out of this trade. I would, at this point, you should be getting out of this trade if you're in a short. Depending on where you're short too, but if you have a stop loss set, do not move your stop loss. Trust me, do not move it. Just take the L, There's always another trade. Don't blow your account. I meant pre-market high lines. Yeah, so once this starts moving a little more to the upside, right? You don't want to just buy this because it may sweep this, and then move down. Like if you were to, for example, right? This isn't the strategy I'm trading on these accounts, but hypothetically, if I wanted to take a long right now, I would wait for this price to move higher up, show that it's actually starting to close up here and show strength, that it's not just a sweep, but actually a heavy close up, and it wants to keep going up, and then kind of wait for that pullback into this. Now is going to be a major support level. So you kind of wait for that pullback into this level to go higher. But you don't want to, you don't want to just get long here because you're potentially getting long at the very top of the move. So you want to wait for a strong close if you want to get long, which, I mean, it's not my strategy. I like to do this right here. This would have been my entry for a long. I was in a buy, price ran down, tapped my stop loss to bounce back up. Your stop loss was my TP. This is why, I don't know what strategy you use, but incorporate, I think you should incorporate, right? A sweep of the lows, right? Like, why would I have waited, right? For example, a long. You said you were in a buy. Why would I have waited for price? See this line I have drawn? This line is a very specific line I drew before, right? As market opened, pretty much. That was a very specific line. We have a lot of liquidity. If you look at the 15-minute chart, right? There's a major level of liquidity right there. So I marked it out, and I marked out this high as major levels of liquidity. Then I moved down, right, to the 1-minute chart. Price swept there. I took a short, right? As we inverse, there's a gap right there. As we closed below right here, this candle closed, I took a short. Why? Because I knew price took out this level of liquidity. Price already took out. So I'm thinking, all right, price can now go down to take out this level of liquidity. It could potentially, it's probably going to move back down to take out this level. And what happened? And that's where I had my TP set, because I knew price could take it out and then rip right back up. So it hit my TP, started ripping back up. This was my next level. I didn't take this next trade, right? Why would I have waited for this to get swept in order to take a buy? Because now that this level, this major level is swept and price starts moving up aggressively, this becomes a protected, right? Your stop is now protected because technically it's already swept that level. So if you get in after the sweep, right? Now it doesn't work 100% of the time, but the theory is, right? It swept it, you get in after the sweep, now it's protected. So you don't have those situations where you're long and then price takes you out and then it continues moving up. So I think any strategy my opinion, you should wait for that sweep so that your low is your stop loss is now kind of protected because it's already taken out that level. Now, if it comes back down and takes you out, takes your stop loss out, a lot of times it'll just keep going down, right? It's not a sweep, now it's just pushing down. It just, I mean, it's never 100% of the time. You never know if it's going to sweep and continue moving up or it's going to sweep and then dump back down. But look at those longs. Yeah, I should have took that trade. I should have took that freaking trade. Oh. Man. Should have took that trade. It's all right. I took the first one. I just didn't want to take that long because I literally just got out of the trade. Like it hit my TP and then immediately, like 3 minutes later, was another setup, and I just didn't even. I don't know. I didn't feel like being in another trade. Looking back, I should have took that trade, but Yeah, I agree with you. I got taken out in profit. I got my buy entry. Than that. Yeah. I think that's a thing people should incorporate into their strategies. Because that's just what price likes to do. So you got to use it as an advantage to you to not, you know, as an extra level of like protection. Still holding. You're looking pretty decent still. I mean, I would start to get worried once we, let's see. I would start to get a little worried if price starts to close back below this gap right here. See this gap that it kind of inverse this gap? I think as price starts closing below, I mean, I would start to get a little worried. I would start to get a little worried that we're going to continue going lower. But so far it's looking good, right? So far, all we're doing was potentially retesting a support to go higher. Because we broke it out. Now we're retesting, right, this level right here as a support level to potentially go higher. Now, if it can't hold it, right, it's going to dump. And there's a gap right there. It tested that gap. So there's a support level and a gap there, which is pretty much 2 levels. But, yo, how you doing? Here, give me a minute. I'll be back. Any mentorships? No, I honestly don't. I just trade live. I trade live and I kind of try to teach during the live. I don't want to take money from people. I don't need money. I really don't even have time for that. I buy and sell cars for a living. So I got so much work that I can't, you know. I try to, you know, give as much knowledge as I know during the lives. So, and that's free. So if you want to kind of learn how I look at the market, you could just tune into the lives and appreciate it. No problem. Yeah, there is, to be honest with you, I don't think you should ever pay for a mentorship. I don't think you should ever pay for a course. Bro, there's like, if you're obsessed with trading and you really want to learn how to trade, there's so much things online, right? I don't think you should waste money when you have that much free resources. I didn't pay for a mentorship. I just got obsessed with trading and I just was learning other people's strategies, trying to take something from this person, like figuring out what I like. Yeah, you're going to buy a mentorship and you're going to try to learn someone's strategy and then you're going to, you know, realize you potentially don't even like that. Like, that's not a strategy for you. So you got to figure out just what works for you, what strategy, you know, that you want to trade. Because it kind of always also depends on your psychology, right? Like a strategy that works for someone else may not work for you. And I know it's like, technically, if you follow the exact rules, it should work for you, but there's a psychology aspect of it that goes into it. Like, you know, sometimes seeing things like not taking a trade, there's a level of discretion that goes into it. So you just got to figure out what you like to trade. If you're a scalper, maybe, if you're someone who likes to hold longer term. But whatever strategy kind of makes sense for you and it works. It's a bull flag. Potentially it was setting up for one, but for bull flags, I like to see more price action, not just like this little bit of price action, but when price really starts to kind of, but I see what you see. There's a little bit of a bull flag, but yeah, I would be, so far we're not closing. If we close below, I would be like thinking of potentially maybe taking a profit, break even, stop. I mean, you do what you want to do, but that's when I would kind of start to get a little worried if it starts to close below. Now we're We're looking good. It hasn't closed. We're still respecting that kind of... still respecting that gap. Bounced off the 200. I mean, we do have... The thing about it is we do have room to the upside, right? Like, if you look at the 15-minute... Like, look at the 15-minute chart. Why does it do that? It like starts to lag. Look at this uptrend. So we do have room. Now you don't never know when structure is going to change. Right now structure is more to the right, obviously it's to the upside. Kind of like higher time frame structure. Lower time frame structure. It's a little... You're at a point where you don't know. It's taking out the highs. It could potentially go for these lows again, right? If we're like... We're starting to kind of look like we want to go lower. What advice can you give me? I'm new to this. Don't know much but the basics, but still not tried. So you haven't tried yet? You know the basics, but still. You kind of, to be honest, to like kind of learn how to trade, you have to just kind of, you have to want to, like, you have to figure out if you really want to do it, right? Because it's going to take some time to learn, to watch the market, how it moves, like, but I would say the basics for you, right? There's two things price likes to do. It likes to take out levels, take out highs and lows, and it likes to fill what's called imbalances, right? For example, right, this way, price pushed up, and when it pulled back into this imbalance, which is this gap. See when price, let me show you. See when price, like this candle right here, we had such a strong move to the downside that it left what's called an imbalance right here. This gap right here, that's what's called an imbalance in price. So a lot of times when price gets into those imbalances, it likes to fill those imbalances, right? You saw when it filled this imbalance, you saw the heavy selling pressure come in off this candle right here. It did start moving back up, but right, that's kind of how I look at price. It likes to take out highs and lows, or liquidity as some people say, and fill imbalances. And you just kind of have to, once you know the basics, you just kind of have to figure out a strategy, you know, that works, that maybe somebody else uses, that you learned from somewhere else, and kind of try to test it yourself. Try to every single day. Maybe get a simulated account with fake money. Like a lot of brokerages have simulated accounts where you can actually trade with fake money. So you can kind of use the strategy and kind of do that for maybe 6 months. And if you can prove that you like that strategy and you're going to use that strategy, then you can kind of hop into funded accounts. You can buy a prop firm, spend you know, pretty low entry fee. Then you can get into the prop firm route, pass an evaluation, you get funded, and then when you reach a certain profit target, you can start taking out payouts and start actually paying yourself from trading from prop firms. But yeah, the biggest thing is kind of in the early days, right? A lot of people that learn trading, they like to do what's called strategy hopping, which obviously when you're new, you're going to strategy hop because you're trying to figure out what you like. But once you kind of figure out a strategy you like, it's better to stick to that strategy, because when you start kind of strategy hopping, it does help learning new strategies and different ways of how other people see the market. But you want to be able to stick to a strategy, right? And be able to learn that strategy as best as you can. And the biggest thing is watching the market, right? Watching how price moves, and then seeing why price is moving, and being able to just predict price and why it's going to do what it's going to do. Remember I said before, right? I said before, in terms of in terms of being long, when price was up here, right? Somebody asked about longs. I said, I wouldn't really start to get worried for the longs. Like if you're in a long, I wouldn't start to get worried until we close. If we start closing below, that's when I would start to get worried. It's not really looking good for longs. And now we're starting to close below. Now we're in an area where we could potentially, right, go for these lows. I mean, I think personally, as price sits right now, it's more likely, in my eyes, it's more likely to go for these lows than go back up to the highs, as price sits right now. So you kind of just have to watch the market every day and learn to, like, you know, think of terms of probability. As price sits right here, there's a higher probability in my eyes it's going to go for these, take out these lows, than go for these highs again. But yeah, it's a little bit of obsession with trading. You gotta want to learn. I was super obsessed with trading. I was very obsessed. And even me being that obsessed with trading, it still took me years to learn this. To be able to. And I'm still learning, right? I'm still learning it. But every day it's like, and here's the other thing. Here's the other advice I'd give you, right? The reason is you wanna take like trades with a specific strategy, not just take trades willy-nilly, but you want to be able to, when you take losses, you want to be able to potentially learn from those losses and think, what can I do to potentially improve? Like, what could I have done potentially, maybe not even to take that trade? Or could I have gotten out early for a smaller loss? Like, what could you have done? So you kind of analyze your losses and think, you know, I'm still learning and I'm 10 years in. Yeah, well, trading is like, yeah, trading isn't always learning. Like, nobody ever, I don't care if, like, you're a trader who's made millions of dollars out of the market, right? You never, in essence, fully learn trading. And the reason is because the markets are always changing. That's the hard part about trading, right? That's one of the hard parts, is the market is always changing. If you've been in the market long enough, you know that the market in summertime is different than the market in fall time. And the market is all like the kind of the way the market moves, and it changes. So something that can work right now really well, potentially next fall, when fall is coming up, potentially it may not work as good or may not work at all. So you got to be careful. Like, you got to learn how to, you know, see and adjust, maybe adjust your strategy. Like for me, my strategy never like stops working completely, but you may have to adjust your strategy just a little bit, you know, based off of how market moves. And that's the key, like, to being able to realize that the market's changing. It's not moving like it was in the summertime, and being able to adjust your strategy based off of that. Yeah, exactly. That past performance does not determine future success. And that's why past performance doesn't determine future success, is because what I just said. The markets are changing, right? The markets are evolving. The way the market moves in the summertime may not be the same the way the market moves in the fall time. So you got to be careful. That's why past performance does not, in essence, determine future success. Because, right, something that may work in summertime may not work as good in the fall time. Or you have to adjust your strategy based off of that. We consolidated here. Yeah, it didn't take out that low. I thought it was gonna go for that low. I mean, it may still go, but it's kind of just ranging in this price. But yeah, it's the way it was when Biden was in office is different than Trump, for sure. Appreciate you. Yeah, no problem. Yeah, exactly. The way when Biden was trading, I honestly, personally, like, I kind of liked the market better when Biden was in office, to be honest with you. I thought it was going to be completely different. Me personally, when Trump was coming in office, I was excited because I thought the market was going to get so much better. I was like, oh, we're going to get such good price tag. Like, it's going to be awesome. In my opinion, I liked it better, the market, right? I liked the market better when Biden was in office. Just the way the market moved. Why? Why did that happen? Why did I like the market better during Biden? Because Biden was a very predictable president, right? I mean, he was very predictable. He didn't really, sad to say, he didn't really do much, right? And when somebody doesn't really do much, right, he's very predictable and the market loves that. So you always got this like pretty decent, clean price action. But when Trump is in office, right, you get this freaking volatility sometimes that comes in, like the Trump tariff thing. Trump tariff news came out, kind of screwed me up because it was insanely volatile during that time and it could really screw you up. And Trump is a very unpredictable president, right? At any moment, he can tweet something that can cause the market to go haywire. So, and the market does not like when something is unpredictable. The market likes, you know, being able to understand what's going on. Anytime there's uncertainty, the market is going to go crazy. It doesn't like that. So obviously, like when you think about like if there was a rumor that the United States was going to get into a war, right? The market's going to move a lot differently than it is now because it's very unpredictable. And then once the market prices in kind of that uncertainty or that news, once it's already priced into the market, it moves a little bit better. And you never know. Here's the thing. You never know how market's going to react. I've seen the market react to news completely opposite of what I thought. Like, I'm looking at it as like, this is positive news, but the market is tanking. Like, it doesn't make sense. But you never know if that news came out, is already priced into the market and, you know, or what. But that's why the market's very, like, you never know. It's never a for sure thing. There's nothing 100% about the market. Do you have a class or beginning guide to start? No, I don't have any beginning guide or anything. I just trade live. I mean, if I kind of try to teach as much as I can during the live. So, if you have any questions, yeah, just hop into the live and ask me. I mean, I don't have anything really to. I'm just so busy with. I'm so busy with business wise that it's very hard for me to make something. That's why you stop day trading and start swing trading? Potentially, yes. If you're someone who likes swing trading is awesome. If it's a more like, obviously, because the reason swing trading can work better, right? I just don't like my psychology. I don't like swing trading. I don't like it. But for someone else, it makes sense why it could work better than day trading. Is because anytime you look, right, for swing trading, you look for your entries at a very high time frame, right? You're probably looking at the 4-hour chart. You're looking at a maybe even higher time frame. Anytime you look for higher time frames and you have higher time frame like targets, typically it works. It's more predictable, right, on higher time frames. Then the lower time frame you go, the less predictable, meaning price action, or the harder it is to predict. Versus higher time frames is easier to predict than lower time frames. But for me, the reason I don't like swing trading is because I want to get into a trade, I want to exit the trade, and I want to be done. I don't want to sit there and have to, like, right, hop off the chart and I'm working on something else and I'm thinking about trading. I don't want to have to think about trading while I'm doing throughout my day. I love the fact that I can hop in at 9:30, wait for my setup, I can take my trade, make my money or lose money, whatever it is. And when I walk away from my computer, I'm flat. I don't have no trades on. I don't have to think about the market anymore. I'm done. But when you're swing trading, it's always in the back of your mind. Like, you're always thinking about, oh, I wonder how the trade is going. I wonder how the trade is going. And I hate that. I don't want to think about the market when I'm not looking at the charts. So it was unpredictable sideways, and when Trump's for a term swept, this term is bananas. Yeah, that's true. A lot of people, that's why also a lot of people liked it during Trump's first term. People were saying that the market was way better. Now it's not as good as it was first term, but maybe it'll get better. I don't know. I'm at $1,700 out of $3,000. Then I will get funded. Should I stop trading for the day? Yeah, well, the goal is, right, to take your setup, to be patient for your setup, And then once you get your setup and you make money, you want to protect that money. That's why you want to be patient for the good setups. You don't want to just keep trading and you know, you want to be able to make your money and then walk away. As long as you get good setups, if you get a good setup, take the trade, right? But don't start taking just dumb trades just to hit a profit target. That's not smart. Yeah, just close your charts. If you took a trade and you're up and you've already taken your trade, most of the time, I would say most of the time I trade like one trade per day. Sometimes two. Today we got 2 setups, but I didn't take the second trade. But there's always tomorrow, right? If you made your money today and you don't see any more setups, there's always tomorrow. But the one thing you don't want to do, right, is take dumb trades and then tomorrow you get another good trade and then all you're doing is making back your losses for your stupid trades that you took. My swings are sometimes days or sometimes months, just depends on what I'm doing, really. Yeah, I mean, that's hard for me. Maybe eventually I'll swing trade, but man, I guess it maybe if you're sized in very light, but like if you're sized heavy in a swing trade, I feel like it's gonna be just you're constantly thinking about it. I don't like that. But see, price came down and swept. I said if we close below, right? I said if we close below, it's not looking good for longs. You gotta be thinking about potentially getting out. If you're in a long, potentially exiting. And this is something I would look at if I was in a long and I saw this, right? The faster you realize that your trade is probably not gonna work, the more you can protect, right? Trading is about protecting your profits. And taking a stop loss at the very bottom versus taking a stop loss up here is completely different, right? You're risking a lot less money. You're saving money instead of waiting for a full stop out. Stopped out minus 50. Yeah, it's not bad. It's a pretty good stop loss. You're not risking a lot of money, so you're not risking. And when you risk a lot of money, right, and you're risking more money than you should, that's when you start to get emotional about your stop losses, right? When you get stopped out and you take a big loss, then you start over trading, taking more losses because you're emotional and you're trying to make it back, and it's a spiral that gets out of control and you blow your account. Hey, what's up, Barkler? Yeah, I took one trade in the morning. With what I was looking for, we had 2 setups. I took one of the setups. The reason I didn't take the other setup is because I just took profit on one trade, and then like 2 minutes later another setup, and I just didn't. I don't know. I should have entered, but I was answering questions and I didn't really like. I didn't enter the trade, so it's all right. So today I only took one trade so far. A W today? Yeah, it was a W. I took this trade right here. This was the pre-market level I had marked out. It took out pre-market highs, and then oh, that's not the gap. Where's the gap? Oh, it's right here. This green. Right, I had this pre-market high level, took out pre-market highs, left this gap behind. Where's the right there? Left this gap behind. Once it closed below the gap, I took a short for this next major level to get taken out. So my TP was literally right there. My stop loss, I mean my take profit was right there. So it literally took me out and then it ripped in the opposite direction. But what a perfect take profit, man. What stock is this? It's futures. It's NQ futures. Today's gonna be a red day, you think? A sell-off? Let's see. I mean, so initially we were on a pretty big uptrend. If you look on the 15-minute chart, structure now is starting to change, right? And this is something people need to like realize when you're looking at. So look at this. You see this massive uptrend, right? It just keeps making higher highs, and it keeps going to the upside. This is the first sign that this thing is reversing, right? Look what happened. It made a low, right? It swept out the high, Now it's this major level, it's starting to break structure on that major level. So now if it kind of taps back down here, and when it comes back up, it should hold, right? Nothing's 100%, but this now is going to become a major resistance level. So old support levels become new resistance levels. So when you break an old support level like that, and it comes back down, and it starts closing, say down here, when it comes back up to retest that level, it holds it as resistance now. It could still sweep it, doesn't, but in order for that to kind of happen, I would want price to kind of move down here. So far, it's, you don't know if it's going to sweep it or it's going to continue moving lower. But right now, as structure sits, it's kind of looking like structure's starting to change, but not necessarily changing yet. But it looks like a first signs of it potentially starting to change. Supply zone holding beautifully, yeah. Yeah, supply zones, these like zones, they're pretty, they're big levels. And obviously these big levels are going to hold a lot of weight when price gets to there. It's going to have a lot of trouble, or there's going to be a lot of support. What is R1 PP? Honestly, so these are pivot points. I don't know what PPS1 R1 means, what the numbers actually mean. But these are pivot points, and it calculates these pivot points, I think, based on like big levels in the market. And I have these pivot points set just as a guide, right? I don't take trades off of pivot points, but they're like guides to me. If I'm in a short and I see the pivot point down there, like I understand that price could bounce there. So either I take profit before that pivot point, or I understand that price could bounce there, and you got to be careful if price starts bouncing there. So yeah, so indicators in general, you don't want to use indicators as something to kind of take trades off of. You want to use them as gauges, right? And that's where a lot of, I think, traders make a mistake, is they think that, right, a lot of new traders, they look for indicators as something like, oh, what's the next indicator that's going to make, is there like a magical indicator that's going to make me profitable? It doesn't exist. There's no such thing as an indicator that's going to make you profitable. Indicators are used as gauges, right? Like, for example, even the 200 day. It's used as a gauge of if we're above this 200 EMA. If we're above it, we're pretty bullish if we're above it. If we're below it, we're pretty bearish. And you can see, right? It bounces a lot off that indicator. But it's not something you would use to take trades off of. It's if I'm already in a trade and I understand that we can get some form of a support right there. So are you a profitable trader? I mean, yeah. Have I made money out of the market? Yeah. I mean, I've taken money out of the market, but But like trading is never something like it's not consistent. Meaning, right? It's not like a job where you're gonna make money every single month. Like, it typically doesn't work that way. Like, you're not gonna just come in and every single month say you want to make $5,000 or $4,000, and I make every single month $4,000 from trade. It doesn't work that way. Trading is a lot of ups and downs, potentially break-even months, potentially months where you lose some money, and then you have other months where you do really good. So it's just it's fluctuation. And the goal of trading is to be able to look at, minimize the bad days and maximize the green days. So you can actually, and then learn how to take only good setups and, not take stupid trades, and be patient for the good setups so you're not making back losses, but you're consistent with your green days. You're cutting your losses pretty quickly. What's your advice with risk management? I mean, it depends what your strategy is, but I mean, you want to allow yourself, in essence, with risk management, depending on your account size, right? You want to be able to, take multiple losses. You want to be able to go through drawdown, right? whatever your risk management is. Like for me, right? When I trade prop firms and I have an account, I want to allow myself 6 losing trades in a row. Meaning, and this is just based off my strategy. It may be different for other people and their strategies. It's different for everyone, right? But for my strategy, I want to allow myself for 6, at least like around 6 losing trades in a row. I typically don't take more than 3 losing trades in a row. So allowing myself 6, I'm protecting my account, right? And if I was to say take multiple losing trades in a row, I would have to size down and reevaluate like what I'm doing wrong to not blow my account. But yeah, you wanna be kind of risk off. And then once you build up your account, or with prop firms, you get multiple accounts and copy trade, then you can increase your risk, right? The goal is to learn the strategy, right? And be consistent with that strategy. And then over time, you can increase your risk based off of the strategy, based off of how much losses you take in a row. And you can kind of adjust that based off of your data. But obviously, like somebody who goes maybe for higher RR trades that has a lower win rate. Like there are people that are profitable that have to go for higher RR trades, but their win rate is like, 20%. Obviously with a 20% win rate, you need a lot more wiggle room to go through that drawdown. Me as somebody who scalps, right? My win rate can sit around 60-70%. So me being scalping, I can allow myself, for a lot less losses, because generally scalpers are going to take less losses than people who swing trade. And that's just because I take quicker profits. So you were in for puts? Yeah, I was in for puts, but I took puts a long time ago. I took him right here. This is pre-market highs. So when market opened, I had pre-market highs set. And then as price swept pre-market highs, and then we got this massive rejection candle. As we inverse this gap right here, I took a short for kind of this next major level to be swept. And then my take profit was at these lows right here. My take profit was pretty much exactly where that line is. Because I understood that we can sweep this major level and then move up, and that's exactly what we did. I think it's the bottom. Well, now look at structure. It's starting to kind of shift to the downside. So price isn't showing that it wants to move up. It's showing that it wants to keep going down. And if you look on the 15-minute chart, right? Look at the 15-minute chart. Once we get this 15-minute candle, when's the 15-minute candle? When's that next 15-minute candle open? So we're at what? So 45. We got like what? Nine-ish minutes left? We got around 9 minutes left. If this 15-minute candle starts closing like pretty heavy, then we're pretty much changing structure to the downside. That's what it looks like to me, at least. And you can see even on the 1-minute chart, look, it broke that. It's retesting it. It's almost forming, it's almost looking like it wants to form a bear flag. And you can kind of see the bear flag kind of start to form, right? Right, you got price kind of doing this thingy. Right, when price starts to kind of like get tighter and tighter and tighter and tighter and tighter and tighter and tighter, and then it, as a bear flag, it could break back below the to the downside. What do you trade on? Ninja Trader. Ninja Trader, but I also have TD Ameritrade because I used to trade options and I just use that as charting, but I don't need that. The only thing I need on TD is the view op that I have over there. Everything else I have here. Could be, but the speed of the candles looks like a bounce coming to the north, to the upside. Yeah, so if you're, for example, for longs, right? You don't want to really take longs here until, like, if price would start, say, breaking above this 577 level, for example, right? If price broke above this 577 level and kind of pushed up and then pulled back to it to potentially go higher, right? Then you kind of, as we break above and start closing up here, we could potentially be kind of shifting structure back to the upside on the 1 minute chart, right? And then you would see what you would see on the 15-minute chart. If that candle doesn't close and it starts closing up here, you would see a long wick on the 15-minute chart, potentially indicating like a sweep instead of a continuation to the downside. So we can see, we'll see what happens. I mean, interesting to see if price kind of, or maybe it sweeps it. What price also could do, if it doesn't close heavy, what it could do is kind of sweep this high, take out this high, internal high, and then move back to the downside. But for long positions, for me personally, I wouldn't want to take a long until we get maybe like a pretty heavy close above, and then we could potentially come down to retest for a long back to the upside. That's, for me, that's what I would be looking for if I wanted to take a long. But I would not be taking a long here just to take a long, because this could sweep and still dump down. You don't want to take a long and then, right, it starts dumping down against you. You want to wait for a confirmation that they're taking it back up. Right, you don't want to get in early and you don't want to get in late. You want to get in the middle and then get out before the end. Meaning, you know, you want to catch a small sliver of it. You don't need to catch the whole move. Like, you don't need to catch the bottom of the move and then to the very top of the move. Right, you just need to catch a little sliver of the middle of the move to make money. And then get out where it makes sense. Like for me, for example, right? If I was looking for a long, say we get a close, say price starts pushing up and it closes up here. Say it closes around this area right here. Then I'd be looking, okay, potentially for a long, if it pulls back and to hold this as support, you could potentially get in at support and then take price up to potentially sweep this level if it hasn't taken an out yet. That's kind of how I would look at it. But you could see it took out this level, like I said, right? Took out that level and potentially moving back down. Or it starts out, or it goes back up. But as long as it doesn't really close heavy and inverse this gap, right? Once it inverses that gap, then you could potentially start thinking about maybe taking longs to take this internal high out. But as long as we stay below this gap, we're pretty much short. No longs today, trust. Yeah, no, I'm not. My major levels have already kind of, if I wanted to take a long, me explaining this kind of long setup, it's not my strategy. I'm just explaining what price could do. Like, if I wanted to get in long at this area, that's what I would look for. But I wouldn't, it's not my strategy. I wouldn't get long here, right? If I wanted, for my strategy, if I wanted to get long for my strategy, this is what I would look for. This is the next level right here. My next level would be all the way down here. And what I would do, right, this is a major level. Why is this a major level? Price came down to this area, and then look at this. We got a massive bounce up from that area. So as price comes down to this level, what I would be looking for is a reaction off that level and a confirmation we're going to go up, you know, for a scalp, at least for a scalp. So once it takes out that level, confirms that it wants to go back up, and then I take a scalp off of that. But that's my next major level, potentially for a long. And that's a 455 level on the 15-minute chart. This is a 15-minute time frame. And that's my idea, right, for a long, if price does get down there. But I wouldn't take a long. Why wouldn't I take a long? We've already swept that level. This line, right? This line I have marked out right there. We've already taken it out. Look on the 1 minute chart, right? It came down, right? It came down and it took out that level. See this wick right? Let me move it. See this wick right here? We took out that level. We started kind of showing signs to the upside. There's a gap right there, right? It closed above the gap. And then look what happened. We closed above the gap and then we started pushing up. So the fact that I already took out this level, now it doesn't, that level doesn't matter to me anymore, right? So my next level would be all the way down here. That's my next level of interest for my trading strategy. And if I wanted to take this kind of setup that I explained earlier, I would have to get different accounts. I don't want to trade different strategies on different accounts, right? The goal, if you want to trade, and this is more like as you get more advanced, right? When you have one strategy and you kind of can get more accounts to get different strategies, you could do that. Have different accounts for different strategies, but I don't think you should ever trade multiple strategies on one account, because then your data is all mixed up, you know? You want to know how you're doing, right? On every strategy. Just got killed in the ranging. Yeah, if you're trading this, that's why you don't want to trade the chop. You want to wait for price to confirm it wants to go in one direction. You want to confirm, right? It starts to look ugly for the shorts as we start closing above this gap. In my eyes, like, okay, like, as we start closing above that gap, we're at view op too. That's why you got to look at view op. Look at the view op. Every time, like not every time. A lot of times when we're at view op, we get chop. And view op is pretty much, I don't have view op on this chart, but view op is right where this line is. So where I have this major line right there, that's view op. So we're getting just chop it. Now it's starting to close. Once we close above this gap, I would potentially, like, you could start thinking about seeing maybe price can start going to the upside. But we still have that 200 to get through. Now let's see. I'm just predicting. I'm not taking this trade because this is not my strategy. But just sitting here and being able to... Okay, so now look at this. Now this has to hold as support, right? Let's see if they hold this as support to potentially go to take out this next internal level. No, this is NQ futures. A 45-minute time frame. Just pick a style that works for you and go hunting. Yeah, exactly. So we swept it. We keep sweeping it, right? And this is why I don't like taking small levels, right? I like to take sweeps off of major levels because major levels hold stronger weight. Anytime you kind of take a setup on a 1 minute chart, 1 minute charts don't hold as much weight as a 15-minute chart does. So all we did, right, was we just took out that high and then dumped. That's why I don't take these trades. And there's that 200 right there. That 200 is going to act as resistance to get through. But yeah, like something like this isn't my strategy. See how the stock wants to push up, but the sells are pushing it lower. Yeah, it's like it wants to go up and then sellers just take over. I mean, look at this. Look at this candle right here. Look what happened. Look what happened here. And this is when you look at price action, right? And understand what's going on. Look what happened. Right? Buyers started to step in. You get a green candle, little red candle, another little green candle, another little green candle. And then look at this. This one red candle just took out the past what? 1, 2, 3, 4. Took out the past like 4 green candles. So you can see buyers step in a little bit and then sellers step in aggressively after that. So you get one massive red candle. And then buyers push it up, sellers take over. Buyers push it up, sellers immediately, look at that. You got 1, 2, 3 green candles. One red candle just took out 3 green candles. And that's why you got to be, and this is why I say, right, like this like 200, I use it as a gauge, right? So even if you were trying to potentially look for longs up here, understand that we got that 200 that is going to act as a pretty strong resistance. So this could be an indicator of potentially don't take the trade. Don't take the trade because we're pushing into a major resistance, that 200, and it could reject off it. So it's exactly right. We're rejecting off that 200 day. Holy chop. Yeah, we're just freaking... And see, look what it's doing. It's taking out these internal... I don't take trades off of these, like, 1 minute time frames. But you could see what it's doing. It pushed down. Look, it took out this low. What happens after it took out this low? Look, it's starting to move back up. Now we got a gap here, right? In my eyes, if we close above this gap, we're probably going to go for this high again. Right? So like this gap. Let's see what happens. We got about 15 seconds left. If price closes above, I think it's going to go for this high again. All right. So now, and this is a 1 minute time frame, which they just don't work as good as 15, but it's kind of how I predict price. So although we do have a major level there, but we'll see what happens. And also on the 1 minute time frame, you get a lot of fake outs. You think price is going to do one thing and it just does the opposite. That's why you have to look at higher time frames in order to take trades. Because you're just going to get chopped up on lower. If you're only focusing on lower time frames, you're going to get chopped up. Right? And like, I'm trying to analyze price. I'm not trying to like, you know, I'm not taking trades. I'm trying to predict price. But I would never take a trade here. Like, this is not a trade that I would ever take. I would wait for a major level to get hit before I take a trade. Because this is what happens. You get chopped up. Like, on a 1 minute time frame, this is technically my strategy just on a 1 minute time frame. And you see what happens on a 1 minute. You just get, a lot of times you get chopped up. That's why you have to look at higher time frames. And in my early days of learning this, I legit used to trade the 1 minute, kind of like internal sweeps. And I kept getting wrecked so many times that I stopped taking these 1 minute ones. Because it just, you get burned so many times. And now I just only focus on 15 minute ones. See, if you would have took a long right there, look at that. You would have... You just... Price is a lot less predictable on the 1 minute than the 15 minute. I use the 15 minute. Yeah, it's a good... It's a really good... And if you look on the 15 minute time frame, you kind of see what's going on. Right? We're still sweeping this. We're not, like, look at the wicks on the 15 minute. We have a lot of buyers stepping in at this level. Until we get a strong close, then it kind of starts to change structure. But these 15 minute candles are still closing pretty heavy to the upside. Good information. Yeah. You always want to look at higher time frames. You want to look for higher time frame levels, and then this is how people trade. They look for higher time frame levels, and then you zoom into the 1 minute time frame to take your entries off the higher time frame levels. But trading this 1 minute chop, like, you're just gonna get chopped up. If you're just focusing on 1 minute time frame without looking at higher time frames, you're going to get chopped up. Like, it's just, it's very, 1 minute's very unpredictable without looking at the higher time frames. Freaking spam. Dollar is also rising. Oh, and yeah, you can look at correlating pairs, right? Like the dollar versus how the dollar moves. Like, I think the dollar, I forgot how it moves. Does it move with or against the market? I forgot, but yeah, there's other correlating things that will move Like when the market goes up, it goes down. Typically. Appreciate the follow. Thank you. Can you make money with it going down? Oh, yeah, you can make money with it going down. That's what I did. Whoa! That's what I did earlier. When I took this short, I made money on a short. Shorting is making money when the stock goes down, right? So when price took out, oh, freaking A. When price took out this high right here that I had marked out. Hold on. Let me adjust this real quick. So, right when price took out this high, I went short, meaning I sold. And when you sell, you make money when it goes down, and in order to cover your short, you buy back. So I sell and then I buy back at a lower price, and that's how you make money when it's going down. But here's the thing, you got to be careful. I trade prop firms, right? I trade prop firms, but with live accounts, you got to be careful with shorts with live accounts. Like when you don't know what you're doing and you're trading, this is why people that are new to the market should never trade a live account. I don't think they should ever. They should go prop firm route or simulated or prop firm, because when you trade a live market and you don't know and you don't have the right skill set to trade a live market, it could get very ugly, very ugly. Because think about it, with shorts, if you're trading a live market and you don't know how to trade and your emotions are all over and you cancel your stop loss on a short with a live market, you can absolutely get wrecked. Because when you're shorting, the amount of money you can lose is infinite, right? Because something can go up, right? There's no limit to how high something can go. That's why the amount of money you can lose on a short is infinite. Now, obviously, a live brokerage will probably get you out of the trade before. They'll liquidate you before you lose that much money. But yeah, you got to be careful with the live market. That's why I don't think newbies, people who learn the market, people who are new to the market should never trade live market, in my opinion. There's prop firms out there you can trade with. There's simulated accounts and then move to a prop firm. I mean, I don't see a reason anyone should really trade a live market right now. With all these prop firms out there, why would you? Unless you have like the skill set and the capital to be able to do it. But other than that, you know, I don't think anybody should. Don't tell people it's bullish. I'm not telling people it's bullish. When did I tell people it's bullish? I said you look on the higher. This is an example why you don't look at just a 1 minute time frame, right? Because a lot of fake outs. You get a lot of sweeps. Although price did close above this gap. First of all, it didn't even sweep a liquidity, right? So this close above this gap doesn't really. But I said if it closes heavy above it, this has to hold as support for it to continue going up, as to start changing to bullish structure. But if you look on the higher time frame, it was still looking like it potentially wanted to. The higher time frame still showed that it was bullish, right? Now that we're getting a heavy close, now it's starting to shift to bearishness, right? But this structure, right? Look at the higher time frame. Now, structure is now just starting to change to bearishness. It was bullish before. Like, not looking at this candle right here, what makes you look at this price action and you look at that price action and go, oh, it's bearish. What about this looks bearish to you? Nothing looks bearish here. Now that we're getting a heavy close below this structure, now price is starting to confirm, kind of start going to more bearish structure. You even look at these wicks on the 15-minute time frame. Look at these wicks. Look at these wicks. This is showing that buyers are still trying to step in here. Now that we have this massive red candle to the downside, Now if we close heavy, this is gonna hold, this should hold as resistance to move back down. But that's, now structure is starting to change. But before it was absolutely bullish structure. There's nothing bearish about this structure. We need a bear icon on the chart. I should actually. You figure out how to get like a bear and a bull. And it changes. As structure changes, the icon changes. Did we just take out some key lows? No, we didn't. Not yet. My next like key level is all the way down here. This level right here. I mean, it's still got room to take out before it takes out this major level. Price action was terrible for Nas. I mean, it's in the morning when the market opened, it wasn't bad. I think it was. I mean, it was choppy. It depends on your strategy, right? For someone, it may have been horrible. For another person, it was amazing. Like range traders. I'm short with a tight stop from 23,571. 23. Yeah, you gotta. I mean, yeah, price can come back and retest this level. So, I mean, have a stop loss where it makes sense. Like, right? If you potentially, right? If you wanted to, like, for me, what I would look at a stop loss was potentially like above this candle right here, because I understand price can come back up and it could retest this level as resistance. But once it starts breaking above here, I mean, you got to be careful for shorts. But yeah, you just want to... That's why I'm patient for my major levels. Because these kind of 1 minute sweeps don't... Like I said, they don't hold much weight. So, you get a lot of fake outs. Do you have a Discord? No, I don't have a Discord. I trade live. That's it. Oh, stop that in profit? All right, that's not bad. That's a good stop out. You're just protecting your trailing your stop. It's not bad. It's good risk. It's a good risk management. But yeah, you could kind of see how structure is kind of like, that's why you could be fooled on if you're just so focused on a 1 minute chart. It's very easy to get fooled, right? Like we look like we're bearish on a 1 minute chart, but before that we were pretty bullish on a 15 minute chart. Now we're starting to shift. Now finally we're starting to shift to. These are 5 minutes. No, this is a 1 minute chart, but I mark out my levels on a 15 minute chart. So like these levels I have marked out, right? Like this level I had marked out, this level I had marked out, this level I have marked out. These are all 15 minute levels, and then I shift to a 1 minute chart to look for entries off the level. So we had an entry right there, took a short. There was a buy entry here, but didn't take that long. And then now that this level got taken out, this becomes invalidated for the next time. Sellers are still, look at every time we push up a little bit, look at the selling pressure that comes in. 1 minutes are scary. They're not scary when you look at the higher time frames, right? They're not scary. 1 minute time frames are meant for, like, you almost get like a sniper entry. You want to be able to have your higher time frame for as your levels, and as price gets to those levels, you zoom into a 1 minute time frame to then take your entries off of 1 minute time frames. At least that's how I do it. But if you're just looking at a 1 minute, I used to do that. If you're just looking at a 1 minute without looking at any other time frames, it's freaking scary because it's a bunch of, a lot of times you get faked out. It's very unpredictable on a 1 minute. How do you calculate your success, daily, weekly, or monthly? I mean, I would say more monthly. But even then, even monthly, I mean, you can have break-even months. You can have months where you lose money. I mean, if you finish green at the end of the year, it's good. That's, you know, that was a successful year if you finished green. Or if you're somebody who's still learning and you're break even all year long, that's still success for someone who's learning. For someone who's learning, if you're learning and you could be break even the whole year, that's pretty successful. Because it's very easy it's not hard to tweak something and get from break even to, you know, to being profitable for the next year. Too much noise on a 1 minute? Yeah, there is too much noise. And I got burned by that so many times. I traded the 1 minute for so long without looking at higher time frames, and it really screwed me up. Sometimes you get good trades, but a lot of times you just get faked out. You just get... Did that 15-minute... I'm curious if that... When does that 15-minute candle close? Oh, it already opened. Right? So now we got this... See, this 15-minute candle... This 15-minute candle closed pretty heavy, right? So... Structure is kind of starting to change, meaning... We could have some form of a bounce here because this is a support level, right? Remember, old resistance becomes new support. So we broke out of it now, right? We're coming back into it and we're retesting it. You see how it's reacting off that level right here. So you can see how price reacts off that level. Now, that doesn't mean it's going to go back up, but it could react off this level, come back, retest it. But you can kind of see, right, how structure is starting to change. Potentially. It almost looks like it almost looks like it wants to go for this low here. I mean, if it can't hold this as support and starts breaking below, in my eyes, I think it's gonna go for this low at least. I'm sick of this, man. Been taking so many losses. Don't, like, you wanna, I don't know what strategy you trade, but you wanna have a strategy and just take good setups. Just wait for good setups. Don't take trades just to take trades. Like, be patient. That's why I have my levels marked out, right? And I'm patient for price to get, like, right now, I would not be doing anything until price gets to this, right, to this level down here. And if we have a reaction off this major level, I could potentially look for going, you know, for an entry. But look, I went through that. Trust me, I went through that. I went through a period where I was just taking dumb trades, just 1 minute trades where I was just like, and when you go on a streak of winning trades on a 1 minute chart, you feel like you're on the top of the world. But you're going to lose that money. Just the 1 minute chart's way too choppy just to take trades off of without marking out levels on a higher time frame or without looking at higher time frame entries. You know, 1 minute chart is made for like sniper entries. So you look for an entry on a 15 minute, but then you snipe it on a 1 minute to get a really good entry for a good risk to reward. Always let price action. Yeah, and you want to let price breathe. That's true. You don't want to have your stops so tight, especially with NASDAQ, because you get a lot of this wick price action that could just stop you out if your stop is too tight. I get stressed out easy. it's good you look at higher time frames. And I think it's just, listen, I've done so many stupid trades on a 1 minute chart that I just got sick of it and I don't do it anymore. Like, you know, you just become more patient. Eventually you take so many losses, you get sick of it, and you just naturally will become more patient. Or you should, because you get pissed off. What's your non-financial advice for a beginner? My non-financial advice is kind of just learn. I mean, kind of become obsessed with learning how to trade. Become obsessed with learning, figure out a strategy that you want to use that works for you and your psychology. And once you figure out a strategy, you know, stick to that strategy, backtest, watch price action. If you take a loss, figure out what you could have potentially done better from that loss. Is there anything you could have improved on? Is there any way you realized earlier on that maybe you should have got out earlier? Like, figure out what you could have done better with every loss you take. And don't trade a live account. Don't trade a live account. If you're a beginner, there's no reason to be trading a live account. First of all, trade a simulated account. Prove to yourself, figure out a strategy you want to use, trade fake money, simulated money. Then when you can prove to yourself, you know, that you want to use this strategy, that the strategy kind of, you understand it and it kind of works for you. Once you have a strategy down, then you can go to a prop firm route where you can buy evaluation accounts, pass those evaluation accounts, get funded, reach a profit target, and start getting payouts from prop firms. But especially in this prop firm era, you shouldn't trade a live account. I don't think there's reason. The only people who should be trading a live account are the people who are like experts in trading, right? The people who have crazy amounts of money, who are very good at trading, and then they trade a live account for tax purposes, right? But I don't think any average trader should trade a live account, especially in this prop firm era where you can pass evaluation accounts for a pretty cheap price and then get payouts, like, you know. But when you're learning, absolutely trade fake money when you're learning. Then move to a prop firm route. Move to the prop firm route when you have a strategy down and, you know, you're maybe profitable for a couple months and you've got like at least the strategy down. Like you understand the strategy. Then you can move to a prop firm route. But yeah, please do not waste your money. Like, make sure you use a fake account, fake money to make sure you get the strategy down. Then you move to, because you don't want to just throw away money. Everyone loses money in the markets, right? Especially when they're a beginner, you lose money. You're going to lose money as a beginner. You want to minimize the amount of money you lose. And with a fake account, with simulated account, right? You can't lose money with a simulated account. But there's a big learning phase. You can learn a lot with a simulated account. You also need to build the right psychology in trading, right? And that comes from experience. To be able to be patient, like for me, patience came with experience for me. Like I had to trade for years and years to be able to sit here and wait for a price to come to my entry and not be itching to take a trade because I'm, you know, getting bored and I have to take a trade. Like, it just comes from experience. You get hurt so many times that you become patient for the good setups. Right? Because trading is inherently risking. You should never invest the money that you can't afford to lose in trading, right? Because you can afford to lose in trading. You can lose money in trading, especially on a live account. On a live account, you can lose more money than you put in. So when you don't know what you're doing, like, yeah, but yeah, don't trade a live account. That's my spiel. Like for me, I have 10 funded accounts, right? My 10 funded accounts, do you understand the amount of risk I'm taking? How big my live account would have to be in order for me? I have 10 funded accounts, right? If I take a $200 risk per account, say I make $200 per account, that's $2,000 trade. That's a $2,000 trade. Like, imagine how big my live account would have to be for me to take a $2,000 trade. Like, I do not have that kind of money to be to even fund that. So on live on prop firm routes, you can make a lot of money with prop firms if you know how to trade. Are you doing a live account now? No, I don't think I'll ever do a live account until, like, if something was to happen, prop firms, right? If prop firms weren't a thing anymore, then potentially maybe, because, like, right, I have the skill set to go to a live account, but there's no reason for me to go to a live account when there's prop firms. Like, a lot less risk with prop firms, and I mean, there's a lot more rules with prop firms, but you know, there's a lot less risk, and you can really scale with prop firms, especially with copy traders. I waited 3 months, no buys during elections to make sure I was ready. Yeah, patience. I mean, this is a long-term game. Gotta understand, trading is not a short-term game. It's a long-term game. So you want to be risked off. You want to last as long as possible to be able to, the longer you stay in the market, right, the more you learn. You've been right about a selling pressure on this one. Yeah, so far it's still, although it's chopping, I mean, it's still, selling pressure is still pretty. Now it could change. It could for sure change. But you see, remember I said this before it even happened, right? This was still looking like bullish price action right here. These wicks are indicator that buyers are still stepping in aggressively. I said price structure is not really going to change until we get a heavy close on a 15-minute candle. Right now that we got a heavy close, now structures, now even if price pushes up here, this should hold, right? There's going to be some form of a resistance here to potentially move it down. But if price can't hold this support right here, if price can't hold this support, I think we're gonna go for this major level here, this low. But this is exactly why it's important to look on a higher time frame. This is the first sign of structure changing. Any YouTubers to watch for beginners? I mean, the thing about YouTubers, right? Every YouTuber has different strategies. I have a different strategy. What you can do is look at different YouTubers and look at their strategy and see if you like it. See if you can take something from that strategy, or, you know, you just have to research different types of strategies and how people trade and figure out what works for you, what you like, what works for your psychology. But I mean, there's trades by Matt. He has a strategy, but his strategy is he takes 10-point profit targets, which is like, it's very hard to do, like when you have a very tight stop. But you know, he has his own strategy and it's worked for him. Patrick Whelan has his own strategy, right? He has a different strategy that he uses. He's a breakout trader. So other people are ICT traders that trade, like, you know, fair value gaps, and every person is different. So just kind of do your research and figure out what you like and how you like to trade. Because, you know, multiple people are successful with different strategies. Like, something that works for someone else may not work for me. That's the crazy thing about trading is you can teach someone your strategy, but it may not work for them. Thanks for stopping me, not jumping in. Oh yeah, not taking a trade is just as good as taking a winning trade. Because if you're not taking a trade, that means you're protecting your profits. If you're not taking trades, you're protecting your profits. If you're waiting for good setups, you're protecting your profits. Because you don't want to take a dumb trade, lose money, and then get a good trade, and all you're doing is making back the loss you took, right? But But yeah, learning to sit on your hands, the amount of days, I've had days where I come in, I mark out my levels, and a trade just doesn't happen. And that's how you know you're getting to be a good trader. In my eyes, one sign of you really becoming, like the first sign of you becoming a good trader is when you can sit and say you have your levels marked out, you're waiting for a setup, and if a setup doesn't come and you just sit on your hands and you walk away from a day without taking any trades, you sat there and you watched price action, but you took no trades at all. That's a first sign. When you can sit on your hands and not take trades is a sign that you're becoming a good trader. Like, can you imagine, like, the hedge funds, those people who are like, can you imagine the hedge fund traders and stuff like that? How patient you have to be? Imagine taking like a $20 million position. How patient you have to be for a good setup. Like, I can only assume that they wait like months for a setup. Like, they wait for something really good when you're investing that much money. Do you trade options? No, I used to trade options. I moved to futures because, I mean, I made money with options, but I like futures better just because of time decay. You have time decay in options. With futures, you don't have time decay. And with futures, you have prop firms with futures. There's just a lot more opportunity with futures than with options. Options, you trade your own money. Futures, you can use the prop firm route to trade, which is way better. But yeah, as a beginner, I would recommend futures and not options. Futures, you know, trade a simulated account, figure out a strategy, and then when you got your strategy down, jump to a funded account, evaluation account to get funded. But do you do this on your own? You don't have a group to see what others are doing. Yeah, I do this on my own, but what I like to do is like a lot of times I like to watch what other people did on the day. So like a lot of YouTubers, I'll watch their stuff to see what trades they took. And it's just interesting to me, like, to see when me looking at price action and then at the end of the day looking at what other YouTubers or what other people took as trades. And a lot of times, or sorry, not a lot of times, but sometimes it does happen where I take a trade and I go on another YouTuber and I see that he took the same trade as me. And then it's like, it's pretty cool to see that, you know, sometimes you see the same thing happen, even though you have a different strategy, but you may see a similar. That setup is going to be nice. The pair that you're looking at is going to shoot up crazy. Yeah, I like NQ. NQ's I like the way it moves. I've been watching it for 2 years already. We got a good thing going with NQ. I wouldn't mess with options, too risky. You can lose, gain faster. Yeah, it's the options are tough because the time decay, right? So it is risky. I wouldn't trade options for a beginner. Do you trade full time? No, what's full time? I trade for 2 hours a day. I don't even want to trade. This whole, I don't think anybody should sit on the charts all day and trade. Like, I don't think that's ever a good idea. But no, I don't. I trade I trade from 9:30 typically to like 11 o'clock, 11:30, something like that. Right now it's what? It's almost 11:30. So typically 1.5 to 2 hours a day I trade, and that's it. You take your setups, right? You make your money, or you lose money, whatever. But you take your setups and you walk away, and come back for tomorrow. I mean, I have other things I do. I buy and sell cars for a living, so I trade. And then I do other things. And that's the goal of trading, right? A lot of people think that trading, if I can learn how to trade and I can make a lot of money, then I don't have to work anymore in my life. I don't think that should ever be the goal in trading. The goal in trading, right, is to learn how to trade, right? So you can make enough money to be able to do another job that you like, right? To be able to do something else that you like, whether it's fixing cars, whether it's doing something else, maybe content creation, whatever it is that you like to do. But trading should give you the freedom to do other things, to start a business, to, start a side hustle. But I don't think you should ever, like, oh, I just want to trade and relax on a beach. Trust me, that's not what you want. It's not. It's fun for a couple of days or a week, and then it just gets really boring. You want to have in life. You want to have challenges. You want to challenge yourself. You want to have goals and always, like, you know, always have new goals to get to and levels, and that's just my opinion. Like retirement, this whole retirement thing, I personally don't ever plan to retire. As long as I'm doing what I love to do, I want to work for the rest of my life. I think it's actually Trump. I think Trump said Trump's dad had a saying, right? To retire is to expire. So, like, if you're doing what you love to do, why would you ever want to retire? Now, even though you do what you love to do, it's not like you're gonna have tough days. There's a lot of days where you have to force yourself to work, even though it's something you love to do. Trading for capital for other endeavors. Yeah, exactly. Trading should fund other things that you love to do. It shouldn't be a thing of... And I think a lot of these, like, trading gurus do that. A lot of trading gurus do that. They try to make it seem like trading, oh, I traded today making my money and I'm going to the beach. I'm going fishing. I'm doing nothing. That should never be the goal. In my eyes. That's just the way I look at it. I don't know. Maybe you're different, but... Do you recommend any simulations? I think a lot of brokerages you could trade a simulated account with certain brokerages. I'm not sure. Like, I use NinjaTrader. I would try to see, like, with NinjaTrader, I would try to call them and maybe see if just ask them if you can open up a simulated account. If you can have a simulated account, like what their rules are. If you could just maybe open up an account and have simulated and just trade a simulated account. So you can call them, and that's what I would do. I would call them and ask them and see. And then eventually, right, you learn, and then you could switch to prop firms, or once you figure out a strategy you want to use. How do you set up your taxes for trading? Well, when you trade prop firms, you get paid out as a 1099. Obviously, when you trade a live account, if you ever trade a live account, it's a lot different. But if you trade prop firm routes, the prop firms pay you out, and it's a 1099. You're like a subcontractor to the prop firms. But this is not tax advice. I am not a tax advisor. But yeah. Honestly, I buy, never sell. Hey, some people don't like shorting. Some people stick to stick to longs. I trade what I see. I trade the price action that I see, but yeah, if you're on a live account, shorting is pretty dangerous. If you don't know what you're doing on a live account, you have to be careful. That's why I do not recommend trading live accounts for newbies. You do not want to, especially when you don't know what you're doing. When you get the experience and you know what you're doing and you have the capital for it, you know, that's different. But when you're learning how to do it and you don't have the experience, not a good idea. I missed this move to the downside. Did it retest? Let me see how it... Yeah, it's just not my strategy, but... Yeah, we came up and kind of retested that level, right? So we had this heavy close. Remember I said we have a heavy close. It's not, structure isn't changing until we have, so this is the first red candle that closed heavy, right? We closed heavy, kind of came back and retested that level. So that's why you saw that uptrend. A little bit of an uptrend, right? We came back and retested that level to go lower. Right, old support turns into New resistance. Sorry. Right here. Let me see it. Right here. Old support turns into new resistance for price to continue going lower. Now, it doesn't always have to happen, but, you know, in order for it to go lower, it has to hold as resistance. This is a messy chart. What is this? This is NQ futures. This is a 1 minute chart. That's why it's a lot of to make it look a little less messy, right? You look on the 15-minute time frame. Look at that. Now it's not as messy. But yeah, that's why you have your levels marked out. You realize what price action is doing on a higher time frame, and ba-boom, you move to a lower time frame to take your trades. Find your level, to trade off your levels on a higher time frame. Last night it was slowly climbing after London and exploded at New York. Yeah, structures, all pre-market it was on an uptrend, and now during New York it's starting to shift back down. Yeah, it's still scary. See, it's scary when you, like, when you understand your trading and you know what you're looking for. It's not as scary. This is scary when you don't know what you're looking for. This looks like a lot of anxiety when you don't know what you're looking for. But when you have a specific setup and a specific trading strategy you look for, it's not as scary because you're sitting there and you're waiting. This noise, all this noise means nothing to me because I'm waiting for a specific setup to form for me to take an entry off of. So this means nothing to me. But when you don't know what you're looking for, it's very scary. I do order blocks. Yeah, order blocks are good things to trade off of. Use as like a confluence. I mean, I think you should have more confluences than just order blocks. But like, if you have order blocks paired with like a liquidity sweep, I think that's what TJR uses to trade. I think TJR uses order blocks and liquidity sweeps, and I think he actually started to incorporate inverse fair value gaps the way how I trade the inverse. But yeah, that's kind of his strategy. What's your trading strategy? So in basic terms, my trading strategy, and this is what I look for every single day. I'll show you. So when I come in at 9:30, right? Price was where? About 9 o'clock, 9:15, 9:30. So price was right here. I don't know if you could, hold on, let me move it over a little bit so you could see. Wait a second. All right. Price opened 9:30. So this little tiny red candle is where price opened, right? When price opened, I marked out major levels. So I like to go on the 15-minute time frame, and I like to mark out major levels on a 15-minute time frame. So as you can see, this is pre-market highs. This is a major level because you see price came up and you see the reaction off that level, right? So I marked this level out, this high right here, as a major level. Same thing with this level. Right? It came down. We had a strong reaction off that level. So I mark out this line as a major level for me, right? This is a major level. That's why I have this line right here marked out as a major level. Price came down here and it bounced off that level. All these kind of, for me, all these levels, these strong bounces off a certain level are major levels. So maybe I should move this major level a little down because we have this major level right next to this one. So then you have this major level. So you can kind of see what major levels I look for. Now, as I have the major levels marked out on a 15-minute time frame, I move to a 1-minute time frame and I see what price does at those levels. So for example, right, price opened up at 9:30. This was that line that I marked out on a 15-minute. Look what happened. Price moved up. It swept that major level, it tapped into it, and then it started rejecting really hard. So there's a gap right here that it left on the chart. As price inversed that gap, right, I went short. I went short to target kind of this next major level here. These lows right here. There's a lot of liquidity sitting down at these lows. So my take profit, where I took profit, was was kind of right at that major level. So price came down, took me out for a profit, and then look what happened. It took out this major level, and look what happened. It moved up. This would have been another entry for me. I didn't take this trade, but you have this gap here too. You have another gap that formed right there after it took out a major level, right? So as price inverses this gap, I would have had to take profit for a 1-to-1 inside this next gap. That's gonna be a resistance point. So my take profit kind of would have been a 1-to-1 here, just because of this gap right here. So I would have took profit for a 1-to-1 right there. But you can see why I look for major levels. Look at the reaction. A lot of times we get off major levels, and that's what I look for price to do, is to tap, sweep my major level, get a strong reaction off it. I take an entry off a inverse fair value gap, and my stop is below the lows, and I target typically like a high or inside a gap or a 1-to-1, just depending on price action. Depends on where my profit target would have been. Because of this gap, I would have had a 1-to-1 here. If this gap wasn't here, I would have went for like the highs. But yeah, that's basically what I look for. And when I have those levels marked out, this chop matters nothing to me, because I don't trade this right here. This doesn't worry me. Once we get to a major level, I start paying attention to price. But all right, sorry, there's a lot of questions. If I didn't answer your question, you want, just type it in again, because accidentally dozed off and missed out on a 6 RR, woke up and got 2 RR. Hey, 2 RR is still good. It's not a bad. If you can get out and you can discipline yourself to get out of a trade, not as much profit, that's a good discipline to have. I mean, I buy 1 time a month a set amount. How about 12 stocks? If you have a strategy and it works, but understand the risk you're getting into when you trade. My drawback, no clue how to mark everything. Hopefully that helped. I think that was before I explained. Hopefully that kind of helped how I mark out the chart, right? I watch a few on YouTube, but I forget who it is. Oh, okay. Speaking to another viewer, okay. But yeah, that's in essence, like I said before, right? The way I look at the market likes to fill imbalances and take out highs and lows. And you want to be able to realize when you get into a trade, right? You want a higher probability for it to go in your favor than against you. Obviously, nothing is 100%. That's why you have a stop loss. No matter how good your setup is, you're going to take losses. Everything can look perfect and you still take a loss. That's just a part of trading. Nothing is 100%. But you want the probability to be in your favor. That's why I have these major levels. So when the level gets swept and it starts moving up and I put a stop loss below that level, I look at it as that level now is protecting my stop loss for price to potentially, for probability to go higher in my favor than against me. Now, does it go against me sometimes? Of course. But that's why I have a stop loss, because if it doesn't work, I come and I go for another trade, and you know, there's always another trade. Like, you can even have a 90% win rate, right? Which is an insanely good win rate. And still, you're going to take losses with a 90% win rate. So, and I don't have a 90% win rate. My win rate's lower than that. Okay, guys, don't take longs. I'm out. Have a good one. He's out of the trade. No longs anymore. But yeah, have a good one. I'm about to leave too, actually. I gotta go. Probably gonna hop off here. I gotta go eat. And hopefully I gotta start work before the freaking thunderstorms roll in. A lot of times by the time I go eat and go back and thunderstorms happen, it freaking sucks. And then you can't do anything. You can have a 10% win rate. Just make sure 10% are really good. Yeah, you can have there are people with a 10% win rate who are profitable. But the thing about a 10% win rate your RR has to be high, right? You can't have a 1-to-1 RR with a 10% win rate, right? You have to have a high RR in order for one winning trade to make back all those losing trades that you took. But obviously you have to have a strategy that allows you to do that. Like for me, that wouldn't work. But that's why I take 1-to-1 RR trades. I take 1-to-1 risk to reward, typically, not always, but typically, and you know. But yeah, I'm gonna hop off. It was nice talking to you guys. I'll be back. It was a good day. Took a good trade, but I'll be back tomorrow. I'll be back tomorrow. So if you're here, hop on. It'll be fun. And yeah, that's that. Thanks for stopping by. Peace out. Hold on. I'll ask one more question. I heard questions of people taking longs off 4x accounts and Roths. Bad idea. I don't know about that. But I haven't heard of that. But yeah. All right, guys. Peace out. I'll be back. I'll be back tomorrow. So don't take any stupid trades. Stay safe. Peace out. Ugh.